All right, regulators got the blame, banks got the blame, irresponsible homeowners got the blame, and now Ivy League colleges are getting their share of the blame for making the financial crisis worse. This week's edition of Bloomberg Businessweek looks at how the financial decisions made by top universities, including Harvard and Dartmouth, have deepened the crisis. Joining us with more on this now is Businessweek senior writer Roben Farzad. And Roben, thanks for joining us to talk about this. Let's talk first about what this is all based on, though. It's based on a study which was commissioned basically by the unions at the universities. So that's kind of the grain of salt you've got to put in there first, right?
A grain of kosher salt.
Yeah, a giant grain of sea salt.
What happens is the unions are upset because the New England service workers, because these New England schools, BU, Harvard, MIT, Brandeis, they've all taken a hit on their endowments, and so now they're trying to say, well, it's not fair of you to freeze wages or clamp down on spending and hiring and clamp down on payrolls because this was by dint of your own incompetence that you lost money because of this endowment model of endowment management.
And they did lose a lot of money. I mean, Harvard, it was a record, what, like 30% decline in terms of their endowment.
Right, and it was a liquidity pickle because it was great on the way up through the better part of the decade to be in real estate, alternatives, commodities, these things that were not as correlating with the real down market and everything else that fell, but that you took for granted the fact that you could sell them in a crisis, which wasn't the case. Right. So it's very abnormal for an endowment of Harvard's repute, for example, to lose 30% in fiscal 2009.
But
and
clearly
that kills them.
They didn't want to do it. I'm sure that they agree with the unions that it wasn't a very pleasant thing to happen, but what are they supposed to do, right? I guess they could now, in hindsight, say we made a mistake and change their models going forward. Is that likely?
They might. There's going to be more of an emphasis on tying manager compensation to the performance of the endowment, but I think there's a huge silver lining for the rest of us, those of us who are not privy to alternative investments and these rarefied securities, $5, $10 million and up. It shows you that there's no free lunch. Diversification is diversification. Index funds had a better time. I mean, these guys are supposed to allow for absolute return, and you could have done much better with dirt cheap Vanguard indices. The new paradigm way of thinking just wasn't all that new.
Say that.
That's right.
The other issue, though, in this article, it's interesting, about the trustees and kind of the cozy relationship they had, correct, in managing part of a university's endowment.
Especially at Dartmouth.
Really close. Right, exactly.
Yes, it's really cushy when you're throwing around billions of dollars and the trustees are there to kind of whisper in the administration's ear that we ought to bring on this buddy who was my friend from the class of '68. You're not exactly being the best fiduciary that you can, looking at it with the coldest pair of eyes that, listen, this is not going to be good from a sales fee perspective. So there's a lot of soul searching to do here in the academia.
I love the quote, by the way. Joshua Humphreys, who's the lead author of the report that the story is based on, says, can you imagine the investment committee meetings at Dartmouth? Basically, half the room has to leave, including the chairman of the investment committee.
It's wild.
These guys are upset. Look, but everybody got hit, and it was a huge humbling across the board, as you guys know, in 2008 and 2009.
Now, Harvard says the issues have been addressed. I mean, are they really making specific changes to kind of avoid these strange relationships and getting themselves into a pickle again?
That's all fine, but everybody's going to forgive these perceived or real or imagined conflicts if they can gain 25% a year. I mean, it's a huge way back up when you've fallen 30% after a huge decade.
All right, Roben, thanks so much for joining us. Roben Farzad,
thank you.
Senior writer at Businessweek, Bloomberg Businessweek now.
Right,
we're
that
proud
new
to say.
issue hitting the newsstands today.